Hi, everyone. Welcome to this week's market update. I'm here with Eric Anderson. Eric, markets seem to be finding their feet again. Are investors finally moving on from the tariff chaos?
It certainly feels like it. The buy the dip mentality is back with a vengeance. In fact, Goldman Sachs reports a record $154 billion has flooded into U.S. stocks year to date. But here's the catch. Investors are playing musical chairs in a room where the lights could go out at any moment. While Wall Street chases the bounce, global sustainable funds are bleeding capital. It's like we've swapped long-term thinking for a short-term sugar rush. What we're really seeing is muscle memory. Markets remember every dip since 2009 being a buying opportunity. But this time, the macro backdrop is different, more fractured, more politicized, and far less predictable.
You've talked a lot about political volatility. Any updates on that front this week?
Absolutely. The Trump administration appears to be moderating, at least for now. After weeks of hammering tariffs, they're quietly handing out exemptions like party favors. Car parts from China will now face a 25% tariff, not zero, but not the death sentence many expected either. Behind closed doors, the White House seems to be listening to the industrial lobby and the markets. There's even word that South Korea might strike a deal to soften its own tariff burden. That's given traders something to cling to. But let's be clear, nothing is locked in. The July tariff pause deadline is still the real countdown clock. Until then, this is all speculative optimism.
Intel's results came out. What do they tell us about the economic mood?
It's telling. Intel slashed $2 billion from its capex budget, not because of market conditions, but because of policy uncertainty. Think about that. One of America's flagship tech companies is pulling back, not due to demand, but due to politics. Trump's skepticism of the CHIPS Act, largely because it was Biden's idea, has created a vacuum of clarity. That's hurting investment at a time when we're supposedly reshoring supply chains. And yes, Intel's got its own issues. It's been the tortoise in a race full of hares. But the fact that the broader semiconductor index was up 5.6%, while Intel sagged, tells you where investor confidence is leaning. Anywhere but there.
Let's pivot to macro data. How did the Beige Book and other releases shape sentiment this week?
The Beige Book was, well, beige, no surprises, activity stable, employment softening a touch, and most businesses are still in wait-and-see mode when it comes to tariffs. No panic yet, but also no conviction. But durable goods orders? Now that was eye-catching. Up 9.2% in March. That sounds great. Until you realize almost all of it was aircraft orders. Strip that out, and the underlying capital goods numbers were underwhelming. So yes, there's strength, but it's lumpy. The narrative of resilience is being held up by one-off bursts rather than broad-based momentum.
Gold, Swiss francs, REITs. What's going on in the world of safe havens?
It's the quiet panic playbook. Gold continues to defy gravity. Some are even floating the idea of $6,600 as a target. The Swiss franc is also hitting new highs, and REITs, often a late-cycle outperformer, are starting to show signs of life. That's all code for one thing. Investors are quietly preparing for trouble while pretending everything is fine. And then there's the U.S. 5-year CDS, credit default swaps on the U.S. government, up 100% in pricing. Let that sink in. Markets are assigning twice the risk of default than just weeks ago. That's not noise. That's a warning.
Where do we go from here?
This is a market addicted to hope, but underneath the optimism lies a structural fragility. The Fed is trying to defend its independence. The White House is adjusting policy on the fly. The IMF just cut U.S. growth forecasts for 2025 from 2.7% to 1.8%, and global growth to 2.8%. Inflation remains stubbornly high, and central banks are trapped between fighting that and propping up economies that are teetering on the edge. And yet, we rally. The story of April is the story of denial. Or maybe it's resilience. The truth is, it's both.
That's it for this week. Stay tuned for more insights next time.